quarter it is 26 lakhs and 50,000 rupees, giving an overall average of 9 months of 26 lakhs and 90,000 rupees. So that clearly shows the focus on the affordable housing loans and the low ticket housing loans that we've been focusing on in such a big way. If you look at the breakup of the loans outstanding into different categories, individual loans now constitute 76% of our total loans. Construction finance constitutes 11% of our total loans. Lease rental discounting constitutes 8%, and corporate loans constitute 5%. So between construction finance and corporate loans, it now constitutes 16% of our total loans. Now, there was a period of time 4 or 5 years ago when this used to constitute as much as close to 27-28% of our total loans. So this is a category where the growth has been relatively lower, largely intentionally, because we've been slow, we've been cautious, we continue to remain cautious on non-individual loans. But having said that, in this 12-month period, we had a 6% growth compared to, I think it was a 2 or 3% growth that we had in the previous quarter. So a little bit of pickup, but still the growth is slower than what it is in individual loans. If we were to look at the incremental growth in the balance sheet and break that up between how much of that is on individual loans and how much is on non-individual loans, then in the quarter, 81% of our loans were to individuals and 19% were to non-individuals. If you were to look at this similar number on a 9-month basis, then 90% would have been to individuals and only 10% would have been to non-individuals. So in this quarter, we have seen a little more shift, a larger proportion going to non-individual loans than was the case in the first and the second quarters. As far as the subsidiaries and associate companies are concerned, we continue to hold these investments in the balance sheet at their historical cost and not at fair value. The unrecognized gain on our listed investments, which is the difference between the market price of the listed investments and the carrying cost, is 2,33,608 crores. So in addition to our net worth, which is roughly around 90,000 crores, we also carry another 2,33,608 crore rupees worth of unrecognized gain on our listed investments. And this is only on listed investments. In addition to listed investments, we also carry unrealized gain on our unlisted investments like HDFC Ergo and Credila, HDFC Credila. Capital adequacy. Total capital adequacy as of 31st of December stood at 18.6%, of which Tier 1 capital stands at 17.3% and Tier 2 capital stands at 1.3%. In calculating the capital adequacy ratio, we've taken an extremely conservative view on some of the items, which I will talk about a little later. Non-performing loans, gross non-performing loans stood at 1.36% compared to 1.33% a quarter ago. Individual non-performing loan number stands at 75 basis points. Non-individual non-performing loan number stands at 2.91%. We have been extremely conservative in our provisioning, and that's a policy we have followed over all these years, and we continue to remain extremely conservative in our provisioning. In this quarter, we have charged a profit and loss account with a sum of 2,995 crores in respect of provisioning for loans. In a 9-month period, the total provisioning we have debited the P&L account with is 4,639 crores. On a balance sheet basis, we now carry a total provision of as much as 9,934 crores of rupees. If we were to make a provision strictly in accordance with the time period of default, which is required by regulation, then the total provision we would need to carry would have been 3,624 crores. As opposed to the 3,624 crores, we are actually carrying a provision which is 6,310 crore rupees higher at 9,934 crores. Net interest income. We talked of net interest income several times, and as you know, there are different ways in which net interest income is calculated. So the way we calculated net interest income is 2 ways, and I'll explain both the ways to you. While calculating the net interest income, in the first method, we have only considered interest received versus interest paid. And if we look at that, the quarterly net interest income stands at 3,240 crores of rupees compared to 2,984 crores in the previous year. If we were to look at the 9-month period, then net interest income stands at 9,340 crores compared to 8,317 crores in the 9-month period of the previous year. The other way to look at net interest income is to add the securitized loan. So under the Ind AS accounting standards, when a loan is sold, then you are required to calculate, to compute the future expected profits on those loans, and then discount that to its present value and account for it upfront. Now this quarter, the quantum of loans we sold was lesser than what we had done in the previous year. But nonetheless, if you add back the future income on securitized loans, the net interest income figure for the quarter would then go up to 3,428 crores compared to 3,189 crores in the previous year, and in the 9-month period would stand at 10,063 crores compared to 9,169 crores in the previous year. Net interest margin remains unchanged. Net interest margin in March was 3.3%, in September was 3.3%, in December continues to remain at 3.3%. Spread, March is almost the same as it was in the second quarter. Second quarter spreads were 2.26%, and the spreads we have as of December stand at 2.27%. So marginally 1 basis points higher. If we break up the spreads between individual and non-individual loans, individual loans carry a spread of 1.93% and non-individual loans carry a spread of 3.14%. There has been no profit on sale of investments in the current quarter. However, under the accounting rules, under the Ind AS accounting rules, we have accounted for a gain of 9,020 crores on conversion of the shares of Guru Finance into Bandhan. This is a requirement of the accounting standards. So there is a 9,020 crore rupees worth of gains which have been recognized on this behalf. Whilst calculating the capital adequacy ratio, I mentioned that we calculated capital adequacy ratio extremely conservatively. We have not taken cognizance of this gain. Profit before tax for the quarter stood at 9,143 crores of rupees compared to 2,869 crores in the third quarter of last year. And for the 9-month period stands at 17,658 crores compared to 9,428 crores. On this mark-to-market gain on the conversion of Guru shares into Bandhan shares, we have accounted for the deferred tax liability impact. After considering the taxation for the quarter and the year, and after considering the impact of the deferred tax liability, the post-tax profit for the quarter stands at 8,372 crores of rupees compared to 2,114 crores in the third quarter of last year. For the 9-month period, the profit stands at 15,537 crores compared to 6,771 crores in the previous year. Total comprehensive income for the quarter stands at 7,565 crores compared to 2,139 crores in the previous year, and for the 9-month period stands at 14,897 crores compared to 6,678 crores in the previous year. When we look at consolidated accounts, the quarterly profit based on the consolidated account basis stands at 4,196 crores compared to 3,377 crores in the previous year. And for the 9-month period stands at 18,485 crores compared to 12,769 crores. So this is a quick summary of the results for the quarter ended December 2019 and for the 9-month period ended on a similar date. So if there are any questions, we're happy to do it. Otherwise, we can take it separately.
So any big ticket at all which has turned NPA this quarter?
As I said, gross NPAs have moved from 1.33% to 1.36%. We don't go into details of each account, but the overall increase in the gross non-performing loan number is 3 basis points. If you look at the breakdown, individuals has moved up from 0.73 to 0.75. Non-individual has gone up from 2.87 to 2.91. Any questions? Anything else?
We have lost answer.
Sure. All right. Thank you very much. Thank you.